Alright, so October have been so good and I've been able to make this from this one strategy. So let's get right into the video. I'm going to show you every single trade we took and how it played out, what I looked for, and how you can replicate this same strategy and make the same amount of money if you follow instructions in this video. So let's go. What I'm going to show you is how price delivered today, everything it did. So I'm not going to talk much about London session because London session did not do anything reasonable in Euro USD. Okay, it's not something that I would have loved to get involved with or whatever. That's why I prefer New York, because New York actually gives the best setups most times. So I'm going to go through all I saw today on Euro USD and why we had this kind of analysis. So I have the screenshots all saved up. So let me get the daily charts. Good. So now we have our daily chart like this. When I came to the charts, I was able to mark my buy side liquidity and sell side liquidity. Now, why I'm not just marking buy side and sell side liquidity, the idea is on the daily charts, you must be able to understand what price is doing. Okay, where price is going to, where it's coming from, and all of that. But you must first mark your point of interest around first the price is reacting to. So I had to mark my order block here, the last biggest candle for the drop. I added this, I excluded the wicks, that's out. Now inside this order block we have fair value gap too. I didn't just mark it so I don't know too much element on the chart and make it look complicated, right? But we know that this is a very serious area. Now this market can do two things: either price, because it has entered here, then drop to make a lower low. Understand? If price enters a bearish FVG or bearish order block, you know what next, right? React off it and drop. Okay, so either price reacts off it and move towards this line to the sell side liquidity, or price disrespects this whole area and keep moving up towards this. Now I'm not saying that price will actually get there 100% in either of the lines today, but at least price will move towards each of them, any of them. Okay, yes, price will move towards it in that direction. That's why we call it draw on liquidity. What's draw on liquidity? Draw on liquidity doesn't, as in basically mean that it's draw on liquidity doesn't mean that it must be liquidity, it must be sell side or buy side liquidity. No, draw liquidity is just like the destination where price is going to at every given time frame. So the draw liquidity on daily is where price might end up moving towards. So it could be FVG, it could be order block, it could be liquidity, it could be anything that price is moving towards and called draw liquidity. So I know if what's come towards this place will cast and it will get invalidated and price starts heading towards this, or it will get respected and price keeps heading towards this. Now this is everything you need to know about the daily chart. So when you go on the smaller time frame, all you have to do is to identify the overall trend, what price has been respecting before that time. Has it been respecting bearish point of interest, bearish trend, or it has been respecting bullish point of interest, bullish trend? So if it has been respecting bullish trend, you know that we're most likely going to move towards this. If it has been respecting bearish trend, you know that we're most likely going to move towards this. As simple as that. So let's go to the 1 hour time frame and see how it is. Alright, good. So here it is. What do you see price doing? Price has been trending up. As a matter of fact, the 1 hour is currently bullish. Okay, currently bullish. So as a matter of fact, price is making higher highs and higher lows, no doubt. And also price is respecting bullish point of interest. Okay, right from here, lows swiped, price went up, retraced back to this FVG area. Now I know this FVG was filled, but if you switch to the 4 hour time frame, you find out that it was 4 hour time frame came to 6. So it's still respecting bullish point of interest. So the 4 hour FVG rather it came to 6 here. So you see price still made a higher high, retraced, everything is still bullish. This thing will be full time bearish if it breaks and closes below this low. Okay, that's when you can say okay, that's changed character, now looking bearish. But then not just break, I'm not saying if it throws weak below this low, if it closes below, you know that okay, this has changed hands. But minus that, we know that we are still for the bears, and we know that price is deep into this uh point of interest here. Okay, even minus you looking at the idea that price making lower highs and lower lows, only observing how the market is respecting bullish point of interest will make you understand what trend or what market structure is at play. So if you must trade a counter trade here, you must do it from either a key level or you avoid it. Example, if I was going to buy this market, that's why you see these lines drawn here. Normally I'm bullish today, and there is no other bullish point of interest than what we see right here, which is what is buy side liquidity. Remember, sorry, sell side liquidity. Remember, sell side liquidity is what is a bullish point of interest, just like bullish FG, bullish other blocks. Sell side liquidity is a bullish point of interest. If price sweeps it, price flies up. So I can't see no FVG, no other block around here. Only this one that is down here. But then I see a buy side, sell side liquidity resting here, and that's the closest one. So that's what I'll work with. Now some of you might be asking, and we're in an order block here. If we draw this last down candle point up move, in an order block, why didn't we buy off this? So people ask me, why didn't you buy when price runs this high? So I'll explain. The rule is this: when you come to the market 7 a.m. Eastern time, you must not work with any point of interest that price is already stealing. It's going to actually fail. You work with point of interest that price goes to mitigate. Okay? You work with point of interest that price goes to mitigate, not point of interest that has been existing, that price has been reacting from before market close or opens. So you want price to go and mitigate a new one. Now if there is no one around, you have to chill because price will create and mitigate it. Price will recreate one and mitigate it. That's why the whole patience coming. So you don't have to rush at all. So having these lows, relatively equal lows, also known as social liquidity, which is a bullish point of interest resting here, I said, okay, we are bullish and this is what we have. So if I was like, if price like stays like this and runs up to this level first and start rejecting and start showing different reactions, I can look to sell this. Yes, it's going to be out of the idea that we are bullish on the trend that does not shifted. I might sell this because this what is a high that was run previous day high. It's a very important buy side liquidity. Yeah, it's an important buy side liquidity, previous day high. So price ran it, entered an FVG. Now around here you will still find a 4-hour bearish FVG around here. So and follow that on the daily, we're also in an order block. So to be like daily order block, 4 hours bearish FVG, 1 hour bearish FVG, every of those things is enough, and then will be above midnight price, which will be like premium. That's enough to make price sink. So I'll give it a shot. Okay, but if we don't do that and then price goes below, first we'll have to buy. Why? When price goes below first, we'll be successfully what in discount under the midnight. 1, 2, we are still working with the trend. 3, we have not had anything that will give us doubt that price might sell because we must have not mitigated any of this. If we go here first, then we don't have to have any doubt that price will cast. Because this one, that one. No, you just have to chill and understand. You have to chill and understand that price is most likely going to go up. If it has not mitigated any of this bearish point of interest, neither here or here. But the last thing was that look at how price was going. If assuming price, which price did, price run this small high you see here and start rejecting, what would you do? Don't do anything. Why? Because this particular line here is the beginning of a 4-hour bearish fair value gap. It's also a previous day high. It's also a buy side liquidity. So if price runs a small high here and you say it's above midnight and you want to sell, you're actually doing something too risky because where would you put your stop loss? Around here, which is around areas that price might attack to fall, if to eventually fall. So your stop loss will be resting here inside the 4-hour FVG above previous day high. You're just like a trap, you're trapping yourself. So that is not why you should sell, and you're even counter trading as wrong point of interest that do not align. So it's bad. So if you must sell, you should either run this high or go as far as entering here too. If you must sell, But then price didn't do that. Price just ran here a little bit and dropped during the news, ran slow, and that's how we took our bite. Exactly how I drew this arrow to the upside, that's how I took it. So let's look at live chat. So this is exactly it. Now remember, this is my midnight drawn. Okay, so see where price ran this high temporarily. See this week exactly. Price did it before coming down. Now let me tell you guys something. Had it been price entered this purple place, this purple place, the 4 hour FVG I was telling you about, it's just immediately after the highest. You can see. You say had it been price, went higher than this previously high, enter this FVG, run this high, and then start coming down back to run this low, I won't buy anymore, because that would be two ways. Two ways is that both bearish and bullish point of interest are giving entries at the same time, meaning you can be caught at the other side. Okay, it's going to be called pure gambling. So you must see one very very clean part of it, one very very clean, you know, idea before you take your trade that day. So when I saw it, now let's look at DXY. At that time, what was the DXY doing? Okay, so this is DXY. Good. DXY at this time, but I think I should open the daily time frame of DXY. So this DXY, the same scenario as EU, bullish order block, price could go back up, reacting from the other block, or price could fail it and go to the downside. Two draw liquidity opposite each other. So let's see what we have next. So we're in a bearish trend, making lower highs and lower lows. Price reacted on this FVG, price is dropping, and everything is still looking bearish. You can consider this is looking bullish if it starts closing above there. You know that okay, not what we think anymore. But then right here it's still bearish because you can see we are above midnight. But there is no other block is reacting from, no FVG price currently reacting from or anything. So we know if we want to go and run this high at least, or max run this one, throw it, not close above, throw it, and the sell can come because we'll be above what midnight when it's happening. A lot of people try to think DSR was going to buy from here, and they try to sell EU, and that's when it got clapped. So the same time that EU swapped that low, that was when DXY stopped this high, and DXY dropped the EU bought. Very very simple. So let's go to the chart and see it too for ourselves. So good. Good. So as at this time, what happened to DXY? This is exactly the high I told you was going to get around, up and playing, and it actually did, and that was how price dropped right from there after getting our what confirmation. So I seen it, mean if it's bearish, EU is no bullish. So why did I sell this? For the same reasons. We are both midnight. We are bearish and bearish trade. Market structure is bearish. So price had to run something or enter into a point of interest for us to believe it. Okay, for us to believe it. So as you can see, it's very bearish. Okay, it's very bearish. So price ran this high and then give us the entry and we got in. So why didn't we look at this place to buy from? Because that would be a counter trend. But price never get there or do anything funny. You get before going back up. How do we price got into here and mitigated it and then start going back up to run this high? I want to take the sales again because that would be two ways. Price coming from bullish side and you want to attack the sell. The selling the bearish side, you get collapsed. So that's why see as it did not get lower, it just came here and started going back up. And then it is what it is. And that was how I got it today. So let's talk about the trade management pattern I used. So how did I manage my trade? When I got into this trade, I stay in 5 minutes to manage it. We manage our trading, what's in the discretionary manage. I'm doing this part because somebody asked how do I manage my trades. So before, if you get to TP1, I close risk mechanically. Now, get to TP1, I don't close risk. I make sure I understand what the market is doing and work with it. So now, when we took this trade around here, price flew past TP1 and we're all happy. And then I started dropping down again. I told my guys like, yo, we know where price is most likely gonna head to. So we have this other block here. I was like, when I did it, I told them to reduce their stop loss to the low of this order block here. Why did I do that? I do that because if price tries to break through the order block and fills it, then we are wrong, and let's just take our half loss and go. But if price, if you are correct, price will tap into here, play around, and then boost up, and that was exactly what happened. The price later reacted for me and boosted up, broke this high. That was when I completely sent my what stop loss to what entry. So that's how it basically works. That's how it works, and that's how we took our trade and profit. If you have questions, you can ask me, and I'll answer you. Right? So yeah, I'm evolving, and you have to evolve with me. How am I evolving? Same strategy, but different mindsets and different psychology that helps me simplify it the best way possible. So now, what I mean by different mindsets, same strategy, with the different mindsets, is helping me to reach things faster and know where price is most likely to go easier. Now, imagine this. I want to show you right now. If you bring two traders to explain what happened here, bring two traders to explain what happened here. One of them will surely say price was dropped to this level and went up, dropped to this other block and went up. One of them will drop fib and say price went below 50% of the fib. That's why it bought. Okay, that's why it bought. One of them will say here is a support area. That's why it bought. It bought from this place, but different ideas. Now, that's almost what I'm trying to show you right now. I'm trying to show you guys how easy it is for me to now look at um the bias that normally gets us really worried before. So before, how do we look at bias? Let's assume the daily chart is here reacting from the daily order block, and everybody will say hey, price is most likely going to go up, and then maybe there is something around here like an FVG that price will most likely drop into. So you'll be like, yo, today either price drops inside here, which means the bearish day, or price just keep going up to this buy side liquidity. That's what will be our bias before. So we'll say, okay, price is two ways, we go up, we go down. Now, once we leave this daily chart, you know what we normally do? We go to the 1 hour chart, and then we forget all what the daily chart is showing, and we come to the 1 hour chart and start looking at the market based off how many bullish points of interest do we have, how many bearish points of interest is price reacting from, how many naked bullish or bearish points of interest do we have the price to tap into. If you're listening to me now, you'll be listening to this. Okay, this is not bad, but this is a like more complicated way to see things. So the lesser complicated way is this. Understanding that this your daily chart drawing here is that you have two destinations. Either price comes here for the day or price comes here. They are both draw liquidities. Either price comes to this blue, this FG, or price goes higher. So therefore, on the 1 hour, when you go to the 1 hour, you want to actually see where the trend is facing. If it's showing lower highs, lower lows, then it's most likely facing here. If it's showing higher lows, it's most likely was facing here. So you're judging that your 1 hour price action from the existing trend and not from existing POIs. Meaning, existing POIs can mislead you because the market could be trending up on the 1 hour, but then there was a buy side liquidity sweep. So you start having feelings of, are you sure the bullish point of interest below will still hold? You start having feelings of, are you sure a reversal will also happen? Then you start thinking too many things. You start having idea of today is a two-way day. Price will drop or price will go up. All those plenty drama. While in the right side, we would have seen that okay, price is doing higher lows, then it's most likely coming to this destination. Or price is doing lower lows, lower highs, it's most likely coming to this destination. So the POIs you work with for the lower highs, lower low day, which is the bear day, the POI should be always above midnight. But if price refuses to go back there, then above 8:30. As simple as that. Same thing for the bulls. Below midnight or what? Below 8:30. Simple. So let's get right into the chart. Hope everybody understand what I'm trying to say here. Right? Alright, clear. Alright, good. So this is the daily chart now for Euro USD. So before all that whole pump to the upside, this was what price. This were the area that I was expecting price to go to. First draw liquidity is here because it's a supply. I'm expecting price to head for that. Second draw liquidity was here at the closest week, and here as a major withdrawal liquidity. So it's either price, that time price was around here, see my hand is was around here. Is that price makes it to the upside or makes it lower. So on the 1 hour, you want to see where price is most likely trending towards. Okay, so now this is the 1 hour chart. Okay, and the way price is moving higher, higher, low, you know that it's heading to this blue area. Obviously, it's clear. So first of all, identify what you know your Q zone time. So since it's hindsight you're using to work, I'm going to use a vertical line to mark 7 o'clock Eastern time. So I just did mark 7 o'clock Eastern time, and the next I'm going to mark is 00 hours. Okay, 00 hours here. Zero hours. So 00 hours means that any bullish, now we are bullish, we are finding out that the market is expanding higher. It's very, very, very almost impossible that this is the other place expecting price to come to the daily. Remember these two lines. Price is pointing here, then you expect price for other side to raise and come down. It's not going to happen that way. It's going to most likely what happen. If not, on the norm, I would have said today is a two-way day, stay away from it. This one is 2 ways and the rest because I saw what price side sweep. Remember, this is when we came 7 o'clock inside time. We have not seen this side on the right hand side. We are seeing this place. So after this buy side sweep, I'll say price wants to drop or price wants to go up. We don't trust it. Let's stay away from it. But now, no, I'm not thinking that way again because that's where I was thinking. Was me trying to make was me trying to see this thing as or see all the point of interest without seeing the market or other flow. I'm just busy saying okay, this is a bearish point of interest, this is a bullish point of interest around, I want to trade off it. That's risky. Okay, so the two rules I employed for me to choose my POI is number one, price must be below midnight. Number two, once 7 o'clock Eastern time reach, we need price to mitigate a fresh point of interest. Anyone that been existing before a scam can see this one that price already ran this high. You know, this one is price already ran this high and everything. Good. So therefore, what happens as price has already run that high before 7 o'clock? I'm not supposed to work with that idea in the first place. Even if it was going to sell today, I'm not going to work with that idea because that idea happened before what 7. Once it's 7 o'clock Eastern time, you need a fresh point of interest to work with, either other block, FVG, or sell side liquidity graph. So now that's where you saw the sell side liquidity graph line here helplessly. See that line here? Good. So when I saw it, I said, okay, fine. If price is below midnight, making me discount, and price runs this low, is the new this thing. What do you call it? The fact that price ran this low and went higher under the midnight, that's actually what is most likely gonna happen in this case scenario. Instead of this price one that price has run before, this old one I was seeing before this that's what to trade off. No, you wait for price to what clear its own and actually want to go higher. Okay, so that's basically why I took the buy. So when price cleared this low as social liquidity sweep, I went on the 1 minute and someone was asking something about the 1 minute. For let's go to the 15. What I do on the 15 all this time frame is I want to make sure that whatever I'm doing matches with the smaller time frame. Because like on Monday night it did not, and that's why I did not take trade that discipline. So I'm right here, you see that way, this week it came down. Nobody knows where it came from, but if you look deeply into 15, you find out what that there is an order block here. So this is where price actually just had to jump in, for going up. Yeah, I'm saying. So on 15, the 15 minutes supported it. Okay, 15 minutes supported it. Check the 5. Look at the 5 minutes. Oh, as you can see, the 5 minutes also has a fair value gap around that area, which will validate it. A fair value gap and also an order block around that area, which verifies the whole thing. I'm saying now, time for the 1 minute. The 1 minute is to give what change of character and return to FVG. That's how it works. So watch. As you can see, price went down, created a high, went above the initial high. So to me, that was a BS, and that's BS news. The person was asking. You see, price went up, pulled back, went higher again. That's the break of structure you see. Now, there is what you're going to find FVG around here. So now this is the FVG as you can see. This is the FVG as you can see. Okay. So at that FVG, that's where I you try to what take your trade. Okay. That was our entry at the FVG as price got into it. Stop loss to be just a bit somewhere here. Okay. So that's basically how uh you know how it works. Yes. So see the higher high, higher low price times the FVG, and that's how I was able to catch this price. Who does not understand? Who does not understand?
Please come again. Please come again. I don't understand.
Come again? How now? Where now? What particular thing should I come again on?
How you enter the trade after the FVT has been integrated?
No, now you're not entering after it has been mitigated. You are entering while price is entering inside the FVG. That's when you're clicking your trade. You can use a pending order, but I don't like pending orders because it can make people into confusion. But once price, the FVG has been created now, normal. So once price candle has closed, next one that will enter inside, you take your buy trade. As it's entering inside, boom, take your buy trade.
Okay.
That's how you do it. So
Okay.
you're busy watching the timer here to know exactly when the next candle is forming. You're watching the second timer, the minute or second timer is timing, and that is getting close to the next candle to form. You get exactly. So that's basically how I do it. As you can see, this is what FVG. So before price return inside, you know what that means. Okay, so hope you understand me now.
Yes, I do. Thank you.
All right, good. So does everybody understand why I took the buys today? Does everybody understand why I took the buys today? Does everybody understand? Nice. Nice, 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 nice.
I don't really understand.
Where were you, guy? Where were you? You guys should stop punishing me. Like you come to this meeting and then you just
Sorry,
not.
sorry.
It's punishment now because do you see the detailed explanation? You watch video. Don't worry. I'm sorry. There's nothing I can do.
Say, we are not doing lower high and lower low before now. You say
And
that
it's, I'm
you
not.
say,
I'm not trying to say lower high and lower low. I'm not. There's nothing strange here. I said that you have to look at the two drawn repeat. Daily is two ways. See his blue side. See this line. Yes. Now you have to look at where is price closest to. That's why when you look at the trend is going up, higher highs and higher lows. It's normal logic. Price is going up, higher highs, higher low. So it's likely going to go to this upside. If it was in a downtrend, it's most likely going to come here. Do you get? So any kind of useless buy distractions that will distract you while it's coming here is a scam. You have to sell. Then if price has met that target for the day, don't try to do anything again. Any other thing will be like enforcing trades. You get? So me saying lower high, lower low, it's nothing new now. It's something that you'll be learning. It's not like I'm introducing any new concept. Before, we normally judge these things off point of interest. You get? Okay, price ran this high. Without understanding that there's something above, you want to sell. Okay, price has run this way. You are doing it based on point of interest, point of view, forgetting that in an uptrend, there are also bare point of interest like buy side liquidity. Yes, to actually deceive people. So that's why we are following the fact that where is what draw liquidity is price moving towards more. She gets, and if it's that way that its price is ranging, not really going higher and low, we just stay and watch. Do you get what I'm saying? When I mean, what am I saying? Do you get what I'm saying now? Do you
Yes,
get what I'm
yes.
saying now? So it's nothing too new. You just have to use it normal IQ and know that okay, price is moving towards it or bit more. So then it's supposed to buy. So I'll join the buy. Or it's moving to this place more. So I'm going to say like that's just it.
I understand. Thank you.
Who else does not understand? Who else does not have a question? Okay. So still everybody is good, right? So I'll just save the video and post on the group. Alright, so you can watch it. Kiddy, I was seeing your hand. Were you asking something?
No, no, no. May I understand? I understand.
Nice. So you take the trade.
No, I was not online then. I was doing something else.
Oh.
I thought the day today was not trading day because
Yeah, them will be just if they will on days like this, you just need to look at chart and sharpen your edge. That's all. Alright guys, good night. No questions. I'm saving it now, send it on the group. Okay. Where's the lost in my screen?
You can see your screen.
So if you're not seeing my screen, since everybody's in, if you cannot see my screen, go out and join again. You see it. The network. Yeah. So back to it. As you can see, price we normally say that it's two-way. The price can either go up or go down. Now, when we go to the 1 hour, remember this is daily. When we go to the 1 hour, we'll most likely see something like this, as usual. Right? So start something like this. Now, you see this whole swing is this down move. Don't forget. And we see this green place big like this. Okay? And we see this this gray this black SSL line that we are heading to. We see it down. Now what happens to us is that the way you guys were taught, or the old way we see things, is that people will say, people come and start marking all the point of interest as usual. Mark this, other block or whatever. And now, you know what everybody will do? They'll say, now you're on the 1 hour, since daily is 2 ways, and you've marked all the various point of interest on 1 hour. Therefore, if price retrace to any of these points of interest, let us sell, because 1 hour is bearish. We need to sell because 1 hour is bearish. Now, if the 1 hour is bearish and the daily is 2 ways, you follow what the 1 hour is telling you and you sell down. Now, that's what we are thinking about. Now, do you know the flaw with this mindset? The flaw with this mindset is that you have zero idea about the overall direction and intent of the market. You are just using a stereotyped knowledge of, okay, yeah, the 1 hour, or so the 1 hour, forget the daily. You want to sell because you see bearish order block. You want to sell because you see bearish order block above midnight. That's why you want to sell, because it's a bearish order block. No, that is a bad way to see the market. That's wrong. In fact, when we sell, we don't even care about these targets. We are selling just to get our 3 arrow or 2 arrow. We don't care where price is headed to. That is why at some point price will move and near here like this, and price will now retrace to one unfortunate supply at this level, and from that supply to this place it's not even up to 2 arrow. But then we'll still take that trade and start aiming for something far below this, because we don't care what price is wanting to do. Or we can just come here and say, if price runs this low, we'll buy, since we are very close to it, forgetting that price has a destination to get to in every day. Normally price has a destination to go to, either up or down, but see that drawn liquidity is the destination, and if it gets there, price is because price is not trying to reverse again because it's got there. It will just keep consolidating until that day is over. Example, if this draw liquidity, price will not come here and do this. No, they reach here to sleep and be dance. That's fulfill that day. That day, the whole plan has been executed. So this way of trading is completely flawed. Okay, it's completely flawed. Now it's blind. Now let me tell you what I'm doing right now. Still the same thing we know, but now a different approach. So now watch, which I still use today. So I no longer will say because there is bearish point of interest, let's sell, price is going down. Now never. Since the daily is showing price could come here or price should come here, the idea is this: when you go on the 1 hour time frame, you have to look for where price is trying to point at currently. If price is pointing towards here aggressively, you get, let's say price is very close to this level aggressively, then that is when you can use a particular point of interest around there, but it should be above midnight. Okay, now it looks like what I've been saying, what I explained before, right? But now I'll show you the difference. So when 7 a.m. has reached, this is 7 a.m. You just imagine this line of 7 a.m. I know it's not 7 a.m. on the chat here. Just imagine 7 a.m. Once 7 a.m. has reached, we need price to mitigate a new point of interest. This is a concept that I've not completed with you guys. If it was in an old one, it's actually flawed. If you come and you meet 7 a.m. like this, come and you meet 7 a.m. like this, already inside one. Okay, before I will just call it signal, I want to trade it. No, it's a scam. It's a very big scam. It will fail. You need some price to fail that one or do just another thing. Because that one you cast, that you came and met, you cast. So in a scenario like this where price is very very close to this and it goes above midnight, it's not tradable like this. It's not making sense. You cannot sell towards this. That's a different thing. I see it, you cannot sell towards this. This is your target. And if you miss the trade and price gets here, you're done for the day. Don't drag it. That's what we do now. Now that's the same way if when you came to the chart, the market is facing the other draw liquidity, which was what was happening today. So let me draw it properly now. So if you came today and price was doing this. Now watch. Remember, this big green place is your FG. In this example here, I was showing price facing here. In today's example, this was what was happening. Price was facing the FG. The candle was facing the FG. So price is facing here. Now what it means is that in as much as price is facing here, all you have to do is to work with 1 hour trade. 1 hour has changed character to the upside. Number one. Number two is pointing here now, meaning it's better you trade in the direction of this than sell blindly because of this. Why? On the daily chart, if you sell around this middle between this guy and this guy, if you sell around there, you most likely get collapse because price is like to come here for drop. So if you sell around there, your stop loss will be here, and that's where price is coming from. So selling around there is bad, but buying towards here is good because it's drawn pretty good. That's why we go to the 1 hour chart, when you spot the change of character, that is when you should work with the bulls. It's not like price is very bearish, making lower lows, lower highs, facing here. Then you want to buy towards here. No, that's casted. It must be able to have changed character to the upside. Then that is when you're now going to look for a pullback below midnight. Now, if it does that below midnight, fine. If it doesn't do that below midnight, wait for let's do below 8:30. Let it go back to any bullish point of interest. It could be bullish order block or bullish fair value gap or bullish or sell side liquidity gap. But anything, any bullish point of interest that can push it up, this is where you're going to fuck with, and this is where it's going to take you to. Since this is all liquidity, price will start down soon. Price will not come down because that's the area it's meant to get to today. So if it's meant to get down, this change of character will not happen. and you see it. So now let's go to real life charts. Let me show you what it looks like. This is Euro USD, right? Good. So now, as an experienced trader, we have two drawn liquidities today when we came to the chart, which is this guy and it's supposed to even be this guy. Let me not lie. Me marking this guy is out of I knew that okay today is Monday and price might not expand too high. So this is the nearest sell side liquidity, but then the right side is supposed to be here. Because sell side liquidities are supposed to be actual lows and highs, not random. Somebody was expecting here to be it. Close your eye. Imagine this candle was not existing in the past. This is just a mere candle week. It's not a low. So why do you expect this candle that just reversed now? And if this candle was still going to come down, will this low be visible? You're pointing it now as liquidity because now price is trying to reverse. There's nothing like a low. And if this can drop down, will this be looking at liquidity? No. So you have to put actual lows. So now, when you put actual lows like that, hmm, you put actual lows like that. Now, remember, when we came to the chart, price has not moved to this place. Don't be deceived. So we have to point of interest, this and this. And the one that price is closest to is where price will most likely move to. So we have destination 1 and destination 2. That's why you see me hold DOL1 and DOL2 on the chart. So let's do this and see. That's possible. See. Okay. Daily charts. Nice. So see it here. You see it DOL1. When we get the charts, this is exactly how it was. DOL1 and DOL2. Simple and easy. Simple and easy. So is that price goes here or comes down? Like I told you, I marked here not because it's too necessary, but it's just because it's the closest low to this guy. It's Monday. I person need to go lower. But if you check the price line, see this green faint line here. I don't know if you can see. If you check this faint line, you find out that the distance between this price line and here is closer than from here to even here, as it's kind of closer in the first place. Get then how much more between this guy and this sell side? So here is closer. So price is most likely. I'm not saying it's a most every day if it's closest together. But even on this, when you're going to be confused, the trend on 1 hour will tell you where price is going. So now let's look at the 1 hour charts. So on the 1 hour charts on this day, so let's look for midnight first of all. Midnight 000 hours. It's here. And this is here we go. It's midnight. So now you've delivered the midnight. Remember, what is price doing initially? Price is dropping down, lower high, price is bearish. But before 7 o'clock, price is supposed to, if price is supposed to be bearish continuously, it's supposed to get here and drop. Normal. Supposed to get to this other block and drop. So why did it fail? And why did it keep going up? Change of character. Price has changed. Meaning price is now more determined to get this drawn liquidity, which is the green area or the max, which is this FG. It's determined to get here down to get to this line. If it was going to get to this line, then the area structure will keep respecting. Join one of them to get here. But it's respected. This is where the change of character crept in here. So the change of character crept in inside there. So here is where the change of character happened. So it's now looking bullish because it's getting, so you can catch it now. The things I was expecting, or where I was expecting price to come to, was this demand, and the price will actually run its lows, because there was called London lows. Now I know some of you be like, what's so special about London lows? Liquidity, there are liquidities everywhere. Every highs and lows are all liquidities, right? Hope you guys can hear me. Alright. So every highs and lows are actually liquidities. But you see those time-based liquidities are stronger, are like more like magnets. Example of time-based liquidities, London lows, meaning the lows created during London session, and London highs, the highs created during London session. Previous day highs, previous day highest points, previous day lowest, previous day lowest price, where price which peaked low? Is it, yeah, the last depth of previous day, previous day low? All these areas are very powerful. You can bring turning point to prices. That's why I could call them those moments. I can know that it's a more serious liquidity than a random low and high, okay? And a random low and high. So that's why I was requesting price to go below this, but London low, go below this, it gets below this, the sell side liquidity too, and maybe enter here before it buys up. Now I'm not just capping because it already happened. Okay, I actually drew it. See, I seen it, actually drew it. I'm not just saying it because it has happened. I'm not doing hindsight. So demand and placing price to go. See where I drew it here. Price will drop here and go up. That was expecting. If that doesn't happen, if price say it wants to go up here first, I can expect it to drop because that's PDH, vital liquidity, and it's a gateway towards daily FG. So if I must sell anything here, but if I sell, just like Luna, price runs this high, I sold. So if you sell here, all your support will be here, and there's something here, there's a magnet here, the price is heading to your stop loss is taking. It's normal logic, that one is supposed to understand. If you want to fuck with any selling, let it be above here. So I know that okay from daily FG, okay, making sense. Then at the middle here, you're looking for serious trouble. Anything here will fail. Alright, so price did not go below midnight, I did not go below this. So when price formed 830, I was alerted. I gave up on price because it was so slow and choppy. Now 830 should be around here. So now when price not go around, remember if price does not go around midnight, the 830 becomes what alternative power 3 we use. This is 830 here. Okay, that's 830. So alternative power 3 we normally use. Voila. Oh. That's the alternative power 3 we normally use. So if price goes below 830 and not just going below 830, goes below 830 to mitigate a point of interest. Remember, we have three major ones: sell side liquidity, bullish order block, and bullish FVG. Those are the ones we work with for buys. If price comes below to do that kind of thing while going below 830, then you can try the buys. It's going to look a little bit risky because we have midnight at this guy here, actually. So, and the thing is now minor, and the sweep is very small. So, with discretion, if you ask me, I would actually, put my stop loss a little bit lower just to be safe. You get. So, but instead of me to do it, I'll choose GU because GU did go below midnight. So if I see you doing this rubbish, but GU goes below midnight, I'll take GU just like I did today. Simple and short. Down to the try first things. You never move as fast as expected, So you guys see that price ran here, went below 830, ignored this, and moved and ended up at the strong liquidity. Did you just see? Good. So the same thing happened on GBUSD for Clara. So before I do GBUSD, FPC is not high tight. I'm not trying to fake it. Say, hey, night have happened and now come and start doing all those bullshit. No. Showing you before it happened. Even before price created BOS, I told you that here will be soon to be demand. Meaning I know very well that price would break structure here and here will become P demand. I know. I drew it as my line as a break structure. Go high is behaving. So this is where price, when you broke structure, that's the change of character. That's where it means now bullish. And this is now the next FVG target. So all you have to do is to what? Buy in this other block. Making sure price has reached below the midnight. Then take it up from there. And that's what that was my plan. And I'll show you my plan. It's easy as that. So let me clear what I'm going to teach before you guys came. So check on the daily chart on GU, same thing as EU. FVG is here, the price is capital move to, and we have SSL. Should draw liquidity, that price goes here or here, and it was closest to here than here, and at that time came to the chart. So therefore on the 1 hour we identify what trend is winning at the moment. The trend that was winning at the moment is a a downtrend. Obviously, it's winning at the moment initially, but today price started creating higher highs and higher lows. It has changed. So let's find midnight. Then midnight is supposed to be around here. Yeah. Midnight is supposed to be around here. Okay. Good. So marking all our point of interest. This is other block. Thirdly, you see it. Good. So what price is doing? This price is now expecting very structure. Break of structure here that changed character to the upside. Went below midnight just as I anticipated here. You see next for it to go below midnight inside this demand and spike up exactly what it did. Went low and went up. Simple. This is the draw liquidity I expected price to get to. Without this, or the walk down. So it's closest to this. Price should out to the upside. You join it. So it's not complicated. So I took GU because see now GU went low. And there's one last thing that we normally do, okay? That last thing is that before you try to fuck with any trade, you have to make sure all the time frames are matching. So now when you go to the 15, you want to make sure that this same box that we are inside here is something on the 15. And if you check, that's also an order block on the 15. To see it, so it's matching. Now next is 5 minutes. You want to make sure it's something on the 5 minutes. You find out that this same place that price went below is an FVG on the 5 minutes. All this is must match. Then go to the 1 minute, and that's where you look for the final confirmation. But to make sure price has tapped inside here, giving you a change of character to the upside and increase to what? FVG, and that did not happen. When price broke the structure, that did not happen. Price kept running. This is where I got my entry, and that's why my stop loss was big. But that's where price gave the available entry. Here. So I know that there is FVG, meaning this price can seek low. So I have to stay safe and keep my stop loss to safest place possible. And that's how I keep it around here. 20 pips. And that price will want to get there again, correct? And give it 2 iron shots. And price got here. So my third. Does anybody? So this was the trade I took on GBP USD today, and as you can see, it's actually not cap or me trying to say what does not happen. This is where I called to trade. The same trade I called first that hit stop loss because my stop loss was too tight, which I'm going to explain what really happened. I took the same, entered back and kept my stop loss in the right place. So this is where I called it on the signal group, the page signal group here. Alright, so as you can see, this is the trade. So I'm going to clear my screen and walk you guys through what I saw and what made me enter this trade and why I chose GU over EU. So let's get right into it. We're going to be clearing everything. Even before that, let me show you guys something. Let me Ctrl Z undo. Let me show you guys something very okay. I want to show you guys what I was anticipating and how it played out before it happened. The screenshots of me anticipating exactly what was going to happen. So let me show you what it looks like. What it looks like today. It looks like today. I hope I saved it. Just Euro USD I saved, I guess. I did not save GBP USD. That was crazy. Okay. I didn't save GBP USD, but I saved Euro USD. The reason why I saved Euro USD was because my mind was on trading Euro USD today, which you can see. My mind was on trading Euro USD today, but I already planned GBP USD too, but I did not just save the chart. Okay, just see the same thing you saw it happen on Euro USD. That's exactly what happened. We call these trades. We call this exactly how they happen. No cap. Look at it. No cap. That's exactly how it happened. Alright, so now this is it. Let's go back to this and clear our screen. Okay, so there is a reason why we chose GU, and we did not start the narrative from GU. Okay, we started the narrative from EU and DXY, and we actually worked with GU because GU was giving more better confluences at the end of the day. So if I go to daily chart now what we're looking at on the daily chart is simple. When we came to the chart, this particular FVG price was aggressively going inside of it. Okay, when we came to the chart, price was aggressively entering this FVG. So what I normally do is this: we must have draw on liquidities on the daily. What's draw on liquidities? Where price is most likely headed to. These draw liquidities come from the weekly. You get, they come from the weekly, and the way you treat the market, you treat this market so fractal that don't let this time frame confuse you and make you feel like every time frame is different, this, that, etc. No, you don't do that. If this is a draw liquidity, this buy side liquidity on the daily, on the weekly, this sell side, and you see that price is gravitating towards this, if that what you see on the weekly, then on the daily you still look at that spot and understand that price is still headed there. Don't just take your eyes off it, but just know that on the daily there will be closer drawn liquidities than this. Okay, in as much as price is moving to the upside, to this area is moving in the direction of this, you find other drawn liquidities that price is moving to. So when I came to the chart, all my mind initially at the start of this week, I was expecting price to enter into this FVG and drop here at the start of the week. Actually, most SMC traders were seeing that, but the thing is, we trade what we see in the market, we react to it, we don't just predict. Okay, we watch how the market is reacting to certain levels and know what's most likely going to happen. Price entering into this FVG like this with this big strong bullish candle, that should tell you that there's something wrong. The next candle started going in around our kill zone time, which is 7 o'clock Eastern time. Price has already passed the consequent encroachment of this FVG, which is half of it, which is this dotted line you see. Price has already passed it inside. So I knew that okay, we are headed for here. Because what we normally do is we try to find where price is most likely going to go to on the daily. So we know we have another draw liquidity on the daily, which is this. And this is where the candle works. Where is price closest to? Here or here? Price closest to here. More than here. So that's where we know we are going higher. Most likely going higher. And the way price was reacting on the FVG. So let's go to the 1 hour time frame. Remember the 1 hour time frame, we have to be very careful about what trend is existing. Okay? So this is where 7 o'clock Eastern time started from. Go to market, which is here. This is where 7 o'clock Eastern time started from. So do like you're not seeing what's on the right and you're seeing only what's on the left till this line. Do like that. So the next step I normally do, I go mark my what? Midnight open. Okay, it's midnight open here. Midnight. Gonna go mark it. Label it midnight open. Okay, easy peasy. So I mark that. So and as much as I'm bullish and the trend is what making higher high and higher lows, as you can see. Very easy. It was going down before, but price change character here. This is where price change character here. So it pulled back here going up. So I know that this is now an uptrend and we're here. So one more pullback below midnight to any point of interest below midnight, then we are going higher from there. Very simple. Because now I'm sure that this place is failing, because this is the what daily FVG I'm talking about. Size painted brown. Now we call it milk peach. And then I will call it price just almost failed it. Price has entered inside it and has almost failed it. Okay, so for those of you that do not know what a failed and mitigated point of interest is, if price is trying to do this to a demand zone, for instance, and price entered inside and respect it, that's called mitigation. It's mitigated the order block correctly. But if price keeps going down inside like this, it's most likely going to fail. Fail is when it did not respect it. So the deeper price goes to a point of interest and you want to anticipate it going up from there, the deeper it gets, it has a lesser chance of what respecting it. If you're going to respect it early, just an early tap like this is going to what react. So look at price entered inside the FVG, almost failing it to where it stopped for the reversing, retracing rather. So where was this very faithful order block we had? Was here. So price retraced below the midnight perfectly, entered into the order block. Now there was a reason why I ignored Euro USD stake, GBP USD, and I'll show you guys why. First things first, EU right now, because everything is hindsight, it has played out already. But when this was happening, see, this big retracement was caused by a news around that time. So that news pushed this bearish candle came down with so much momentum. It was dropping so hard that I started thinking that this daily FVG is what influencing it, and maybe price wants to drop, change character to the downside and keep dropping. That's what I thought. That's why it's bad to switch bias because of one thing you see. It's better you stay out when things are not working the way as planned. So using this aggression to enter here. And when I picked DXY on the other hand, remember this was the equivalent order block on DXY. Remember DXY is directly opposite. Okay, directly opposite to Euro USD. Let's find the midnight. This is midnight here. So this was DXY. That's the order block. This is the order block that's equivalent to what we have on E. And I could see a very bullish candle just drove through it, failing it. On my mind was that Euro USD was gonna do the same, drive through it, fail it, and start selling down. Okay, and the fact that the whole momentum was coming from above midnight, so I felt like, oh, sales is active. See what I'm saying? So when I looked at DXY again, so we kept watching, observing. Then we found out that DXY had another intention, not to respect the other block, but to run this high. So remember what I taught you guys, that for the sell part, we have sell point of interest that are important, which is sell buy side liquidity is a sell point of interest. Bearish order block is a sell point of interest. Bearish FVG is a what? Sell point of interest. Bearish FVG is also known as what? CB, sell side imbalance, buy side inefficiency. So yeah, this is where we have that liquidity here, that buy side liquidity. So I'm trying to make this. So price swept it above midnight, which is premium, and price said reacting around there. So why didn't we take in? Like I told you, I was thinking that this bearish FVG on the daily wants to influence it to keep going down. That's what I thought. So I was skeptical about EU. Now let's go to GU and look. Why I picked that GU was that GU might have not given you the perfect structure based on trend and all that stuff. But there was something I saw on GU that made me say, oh, GU is the man of the day. Now, remember on EU, if you check the daily charts, on EU, daily FVG has been mitigated and it was on its way failing. And during the news, price acted like it respected it for a while, because before the news that happened that caused that drop of 1 hour charts, price had not failed here yet. Price had not failed this FVG yet. Price was now reacting off it. So by that time, if you came to the chart, you see that price is dropping from this FVG. So most traders will feel that, oh, it's also drop and keep going down to the sell side, Okay, so trusting that price will just fail it because it wants to head to this place, start becoming like an illusion. You get? So look at it. When price reacted off it, said tracing to this place, it looks like it just keep falling. If you look at it from daily chart, it looks like a price reacting from there. But then why GU now looks better? Because if you look at the daily chart on GU, see that same FVG that EU is reacting from, GU has not entered it at all. So it means this is a draw liquidity for today on GU here, but it's the closest place by it's most likely gonna go. You see it? So this was like the draw liquidity for GU today. We had two, this one and maybe this one here. Okay, this one and this one here. So we have two draw liquidities. So on EU, price has entered here and it wants to react from it, and that's why we are checking whether does it want to react or it wants to fail it and go to the buy side on EU. But on GU, yes, price has not entered here at all and price has not come here at all. So two draw liquidities that we most likely going to trade to. So now what convinced us on buying was this. There is a particular rule you must not forget, which I'm going to announce in this video. This is where our 7 o'clock started from, first of all. 7 o'clock started from normally, right? So don't reason anything see at the right hand side, reason only what you see from the left till this line. Now let's mark the midnight, you find out something. This is where we have the midnight. Okay. So the midnight is very naked. This is what gave me the confidence. Now whenever, listen to the rule, whenever the midnight is naked, okay, whenever the midnight is naked, don't forget that it has not been run even during the London session. It's looking very, very bare. This is a solid magnet, meaning no matter how bearish price might look, no matter how the trend might look like it's going down, no matter all the bullshit it might look like, price will revisit this. His experience has taught me this. I don't know if ST has talked about this, but his experience, I've seen this happen over and over again. If this has remained untouched, then trust me, price must find its way right here. If it does not happen that day, it must happen the next day. But price must find its way right there. So knowing that this draw liquidity is open, I know that this guy is also open, and then price came close to it. Now the thing is this: on a normal note, we all say the place price is most closest to is where price is going to. Is it not? Normal, on a normal note. But now you can't sell towards this if you are considering that okay, price is closer to this draw liquidity, we have to sell towards it. You can't, because price is discount, price is below midnight. It has never been run even in London. Price is below midnight and also below 8:30. Yes, but if you find out where 8:30 is, you find that price was also below 8:30. Okay, it's 8:30. You see, let's label it. Price is also what below 8:30, and we are on this notion on Euro US that buys look like it's gonna work. We are having that already there, and then we came to see that we are 100% discount both in midnight and both in 8:30. We are below it, so no kind of sales can work. Remember, we don't fuck with point of interest that are mitigated at 7 o'clock Eastern time. So if you might be saying, hey, there is this FVG here, price should go into the FVG and drop towards this because it's a closer DOL, draw liquidity, so therefore price should run into this and drop. I feel you, it's not a bad idea, but what I've seen based on experience is that don't work with POIs and price mitigated after 7 a.m. You just skip. No, the mitigation that you must work with are the ones that happen after 7 a.m. has passed. Yes, that's the mitigations you need to work with. And the first mitigation after that 7 a.m. has passed is this one. That's the first, which I'm marking right here, is this one. That's the sell side liquidity. So there's a sell side here. We are below 8:30. We are below midnight. So if it's selling, you can't sell normally to this place. Before you must sell, at least if you must sell GBP as a smart trader, you must sell anything above here. Because if you're selling before price, let me make this 90. If you're selling before price gets here, you stand a risk of price reaching your stop loss just to get here. This is a very solid FVG. So selling at the middle here just because you want to get here is even not wise enough, because you have this above you and it's above previous day high. Anything you see previous day highs are very important liquidity points. So it's above previous day high. So selling around here, you're below 830, you're below midnight, and there's FVG above you, and you want to sell, it's very dumb just because you are aiming here. No. But buying because you are below 830, you are below midnight, and also because this is the draw liquidity you're targeting, and also for the fact that DXY has run a high. Let me draw DXY daily time frame stuff properly. The same thing that's happened on EU was happened on DXY, but the inverse. This FVG, that price entered this thick candle and price was almost failing. You get? So price was almost failing it. You get? So price went up, went above midnight premium, cleared this high and started dropping. So all this that is bearish on DXY should sound it to you. There is no bullishness on DXY. Had even this big candle that ran up at that news did a break of structure, it closed above this high. Okay, I would say okay, that's really bullish. But it did not. It did not close above it. Use a week to run this high. It's a liquidity sweep. So let's go back to GU. So those things are the things that should make you understand that. Yeah. Now the last thing that should make you understand that this was the real move. But this is what previous day low. I've told you previous day high, previous day low, London low, London high are important liquidity points in the market that can cause serious reversal. So number one thing that made my mind very strong on GU buys was that long midnight was open. I'm not talking about a midnight that has not been run in New York. I'm talking about a midnight that has not been run at all that whole day. Anytime that thing happens, a buy must happen towards it. Must. I'm telling you that it's a must. Go and check on your chart. No matter how it looks, it must. You get? So price has to chase it. That's one reason. Second reason, we're also below 830. There's no how selling can happen below these two. Below 830, below midnight. Selling can just happen when we have this above 2. So price ran this previous day low. It was perfect. Gave me the entry. Now this is where we fucked up. My first entry, I screwed it up. That's why you should be very careful. When you focus too much on RRO, how much risk you're gonna make, you can just make mistakes in setting your stop loss. The first trade I took was around here on the 1 minute chart here. And I set my stop loss here. I was like, yo, there's FVG here, every other block. Whoa, price fine to this level. And that's how I got clapped. So when I found out that tight stop loss are removed me, I entered here again. And my stop loss went down here. And that's how I caught this trade. So I've done all my possible best in explaining this in the best way I can. If you have questions, there are links on the description. You ask me those questions and I'm going to answer them. Yeah, so this trade basically made me $19, which is like $1,900. Yes. Yeah, and it would have been more than that because I lost my first trade due to tight stop loss. So yeah, the winning streak continues. October has been good so far. See you in the next video. Peace out, guys.